Investors and traders, welcome to the channel Market Chart Pattern. Today is 6th of August 2024. Hope everyone is having a great day. We will be taking a look at the key US technology stocks in this video. We will actually also be covering the ETFs such as the QQQ and the XLK, and we will also take a look at the price action in the Nasdaq 100 futures, and of course we'll be covering the key main stocks such as Apple, Tesla, Microsoft, and a few others such as NVDA. As always, this video is for educational purposes only, and it is not a financial advice. So we are taking a look at the weekly chart of the QQQ, which is the Invesco trust for the technology stocks. This is the weekly chart, although the week is not over, but this is where we have been following quite a lot of patterns. What is really interesting to note is this, that we have this big pattern completing this one in the black at around the 504 level, where we also had the 1.618 expansion of this BC swing, which was the entire bear market of 2022. And since then we have seen a pretty big drop in the market. And if we are to take a look at what sort of magnitude we have seen thus far, we can use this tool. So we are about nearly 6%. Let me actually move it around here. Excuse me, 16%. So it's a fairly large move, which has come in the last 3 to 4 weeks. Basically, we began to see sharp moves since the 11th of July. That's when the CPI print had actually come out, and that's also where the unwind of the carry trade for the USD Japanese pair actually also began to have material impact on a number of asset classes. So we have done extensive videos about those, so I'll just encourage you to actually take a look in the archive and basically view those videos on those particular topics. Okay, now the key thing to note is that we have the 38.2% retracement of this entire CD swing come at around 408, 409 level. And this also happens to be the structural support coming in from the point B. So there is a chance that this market could actually move a little bit lower, although we are expecting a rally, especially in the early part of the week. So we are reaching pretty much the midweek tomorrow. So that remains as a possibility that this market could actually move a little bit lower and around find a pretty good support around this 38.2% retracement and also the structure here. Now moving beyond this, in my opinion, it's where some of the things could change, and then we could be looking at a scenario where we could have a move which could actually move more in time, so it could take much longer. So here we'll just push one thing out at a time and see how those support levels will actually perform. If we take a look at the XLK, which is the Spider Select Sector Fund, slightly different picture here, but important thing to note is that it also completed this big ABCD, which is in black right here. Let me actually make this line thicker, easier to see. Here we go. So we had major patterns completing, and also on the Nasdaq 100 futures, and we were actually warning about those, that these patterns are actually getting completed, so we should be careful. And this one actually overshot a little bit. Don't know exactly why. This is the reason compared to the QQQ. The composition might be a little bit different, but the bigger difference that we see is that this has actually already completed the 38.2% retracement of the lows of October of 2022, in fact. So that's a pretty important one to make a note of. So this one has actually already made the 38.2% retracement, and also the 50% retracement comes right around where the point B is, which is also structural support. So if we look at this one right here, it's a pretty good important support. So maybe going back to the QQQ, the 38.2% retracement of the lows of October of 2022 when the whole big bull move started, the CD leg, which is a little bit lower. Maybe this one could go sideways trading range to the downward could be the expectation. But with XLK where it is at a pretty important support, we would still expect some sort of a rally to take place. Now, if we just take a look at the futures, so here we go. I'm gonna move down to the weekly chart here, just like the QQQ. The 38.2% retracement is around the B point here for the futures. And let's go back to the daily chart. So this is today's price action, and we had timing come in yesterday, 5th of August. We have seen a low come in the marketplace 5th of August, and today that has been held. We saw the market making an attempt to rally. It tried to rally beyond the highs of the 5th of August, but there were sellers sitting there. They just took over and the market closed lower. So disappointing. It was a rally, but at one point looked pretty strong, but disappointing price action. Key thing to note is the two really key levels to watch. So one thing is we have this big ABCD pattern which is already completed. The XLK already at 38.2% retracement. QQQ hasn't done that yet, and the NQs haven't done that yet either. So this 18,250, this is the 38.2% retracement level of this smaller blue segment that we see, this one. So what we have here is basically this was a 38.2% retracement, so the market was not able to get above that. So it made an attempt, but the market is weaker. Really key one is 18,740, because that's going to be the CD 38.2% retracement of this entire move down from the very highs of 11th of July to the 5th of August 2024. So if the market is able to get above this, that's going to be a pretty positive move for the market. Because it will be overcoming the 38.2% retracement and some structural resistance coming in from the low of 30th of July 2024. So this is the key point that we are waiting for. So in my opinion, the market has a pretty good chance to actually rally to around 18,740, and then we'll be watching really carefully how the price action will unfold from there. But if it begins to move higher, then this means that the market is actually getting stronger, which will be a really good thing and something that we actually want to see in here. Now let's begin to take a look at some of the individual stocks. So let's start with Apple. So the Apple had been in the news because of Warren Buffett selling his stake by 50%. So in fact, he had been selling the Apple stock for quite some time. In fact, when they did back in March their meeting, which they do on annual basis, he had actually sold a fair chunk of it, and it did look like once they had made the decision to sell and go into cash, because in their opinion, or in his opinion, the cash is pretty attractive to him in T-bills. There was a chance that there could be further selling coming. So there we go. This is what we have seen. But from a technical perspective, we knew we have this big ABCD in blue completed right to the tick, and we have seen the market move lower. In fact, this is something which we spoke about when we did the last video on the tech stocks, that Apple could actually move down to $200 per share level. This is what we have seen. It went actually a little bit below to around 196. And the week is not over yet, but it actually closed above the $200 per share level. So what we are actually looking at, another thing is that this move down was a pretty strong move, because this is the previous move that we have seen in this range. And we had seen this 2 times, and this was in fact the ABCD pattern, and then the market just took off from 165 level. It went actually below that, so that really shows that how much strength to the downside was in this move. Now we'll just keep on watching where the lows have been, and the 61.8% retracement comes around the 191 or 192 levels. So I would expect the stock to go sideways. Trading range price action for the stock between this range of 200 190 to 200, and then we'll see what the price action will tell us further. Now if we take a look at the Microsoft, here we go. So the Microsoft had also completed this big ABCD right here, this black one. I've not labeled it as ABCD of the lows of March of 2020, and then it also completed this purple one right here. Of course, it had met our objectives around 433, and after that we were just waiting to see what the price action was, further clues from the price action. But once it began to complete these double ABCDs, this is where we were really cautious for the Microsoft stock. So we have seen a pullback. What we can do is draw a retracement to see where we are. Here we go. So these are the lows of from the October of 2022. So there's a possibility that there could be, a little bit further. Maybe $370 per share is something the stock could move down to. This trend line, a little bit of a trend line here, it was broken. We can draw another trend line like this. There we go. So this one is also, although the week is not over yet, so I'll just wait for it. But 370 is something that we'll be watching, and before if it breaks that, then we have the structural support around here, but that should be pretty good support, 370 for the stock. Where it is right here, the chances are that it's just gonna move into a trading range. Here we go. This is the daily chart, and on the daily chart you can see that this move is bigger than this move from a market symmetry perspective. So this is telling us that the characteristic of this move or the market has changed. So this symmetry has broken. So we should be watching the 370 level pretty carefully if the market gets there. But right here where it is right now, there's some support around here. So I would expect some trading range behavior. So the market will just bounce around for some time. Let's take a look at Google. So I'm going to move to the weekly chart for Google. So the Google chart, we had been warning about this one for quite some time, because just like the Nasdaq 100, it had completed this big ABCD, right, went to the 1.618 expansion of this 22 bear market, and then we have seen a sharp move lower. So this one is actually bigger than any of these pullbacks that we have seen here. So this just tells us that the characteristic has changed. So just like the Apple stock, there's a chance it could come back to test the November 2021 highs. This is what we're expecting, but for Google, just one has to be careful, because it met our targets, and now we're just waiting to see what sort of price action we get from the stock. So this is the daily chart, similar kind of thing. Just look at this, what a sharp move it is. Let me see if there is any ABCD. I see a smaller one, but not the bigger one. So the bigger one is this. So that actually indicates a little bit lower price, but this one, I think this is the smaller one that has actually completed. There we go. And this is why we have seen some pullback right very close to the 200-day moving average. So that's an important thing to note. If it breaks below on 2 daily consecutive basis below the 200 period moving average, that's not going to be good for the stock from momentum investors, and also the momentum would just turn negative for the stock. So where it is, I would expect at least a trading range behavior for quite some time, and maybe the stock might try to rally a little bit. Now let's get down to Tesla. So the Tesla stock has been actually very interesting because we had identified strong resistance because of the 78.6% retracement, and also structural resistance on the left side coming from this point C. And surely we saw the stock actually move lower from there, and it has just completed this ABCD, not exactly the tick, but came very close to it on the 5th of August. So that is, in my opinion, what is holding it. Now, if we draw a retracement, let me actually get rid of this one because we already have one here. Let's see. Yep. So it's gone right between the 78 and 61.8% retracement, and that's the kind of the region where it is likely to find a support because of this ABCD. So the stock remains supportive, and if we because of that pattern, but if it breaks below the 78.6% retracement, that's not going to be good for the stock. And this is on the weekly basis. Here I see two things. One is this red ABCD. This is what we were watching, and this is our preferred scenario because the point C, which came in 22nd of April week, that is still intact. And we have drawn this box where the resistance was. It moved right into that, and now it's just come down and also filled the gaps on the daily chart. So here we have support because of the ABCD, and it's between 61.8%, 78.6% retracement levels. But there is a scenario, if that is to fail, then an alternative scenario, not the preferred scenario, but I have to put it down, that let me actually change the color for it to blue, which could actually mean that we might have seen in that case, we are likely to see a move of ABC to the downside, which is likely to challenge the lower end of the range. This is where in January 2023 the bottom that we had actually caught, because it just completed this fantastic ABCD pattern drawn in blue, the shaded region right at the 78.6% retracement. It might just go and challenge that one more time. This is not the preferred scenario, but that sort of possibility does exist. It all depends upon the support levels that we mentioned on the daily chart, whether they get broken to the downside. So I'm just going to remove it for now. The preferred scenario is still because the point C being intact so far, that we could see the higher prices for this one. So time will tell us. Now let's take a look at Roblox. Okay, so the Roblox, the week is not complete, but this one, we are actually really waiting for the market to finally move towards our target of 67, but there are a number of resistance levels that need to be broken. But it's really interesting to see that some of these stocks have had pretty rough weeks, but this stock has done reasonably well. And moving on to the daily chart, here we can see that sure enough it has pulled back into the middle of the trading range, but the stock has actually remained pretty resilient, which is pretty impressive to see. Now let's take a look at Zscaler. So the Zscaler stock has been pretty interesting because I thought we might be actually starting a bull move higher, but in fact it was a bear, just a corrective move for ABCD, not even a full ABCD around here. And now it's just gone and potentially made a double bottom scenario. But if this bottom does not hold, then it's not going to be good, because then we are looking at around 130. So here we go on the weekly chart. We were looking at it on the weekly chart. So the preferred scenario here is that it is testing again the 61.8% retracement, which is our point C, but of course the week is not over yet. So we were looking for an ABCD higher, but there is a possibility that in fact this remains a corrective move, and that could mean a possibility of an ABCD lower. In fact, and why is that? Okay. So this is not the preferred scenario, but it could see the market move and close this gap around here between the 91 and 103. But it all depends upon this point C if it gets broken down to the downside, and we are looking at the weekly chart, so we'll have to wait till the end of the week. Then that scenario will actually will more likely become the preferred scenario because the key point C will be broken. So far, our preferred scenario is still to the upside because of this potential C point being intact. So this is what we are watching in the tech stocks. Oh yes, how can I miss NVIDIA? So the NVIDIA stock has become a really good trading stock. So a lot of day traders are now playing with this stock because it just provides fantastic volatility on the daily basis. Also, the option players are playing this as well. Here we have seen, of course, a pretty big pullback. This is the biggest pullback we have seen. This is in 2021, 2022 bear market was probably the bigger one, but it took several. In fact, I don't think it was bigger than what we have seen now because the prices are higher. But anyway, it took longer in time. So this one has been squeezed in time. So what it has done is it has come right to the 38.2% retracement of the lows, going back all the way to the October 2022. So this is something that we have actually seen in the XLK. QQQ we have not seen 38.2% retracement. In Nasdaq futures we have not seen, but XLK we have seen, and NVDA we have seen. So if NVDA it turns out to be the bottom or the pretty good bottom for NVIDIA, the stock is pretty involved stock, then it could really, a lot of support can come for the broader markets. So this is what we are watching. Going below the 38.2% retracement will open up fairly other support levels below, but right now the week isn't over, but this is where it found its support. And let's take a look at it on the daily charts. Here we go, and let's see if we have an ABCD. So there we go. So I'm doing it live with you guys, and then there's a potential ABCD, but it got extended. So let me do it this way. So if I just take this one and we take this 1.272, there we go. So that was the 1.272 of the smaller ones, and the one from the big top, let's see, yeah, so there we go. That came around 99, but of course that did not hold because the smaller ABCD cycle was actually taking over, and the bigger one was actually calling it a pretty good level around the 61.8% retracement. But there we go. So 38.2% retracement from the 2022 lows, 1.272 extension from the smaller ones. We have a confluence of two things coming together. It's a pretty good support level for NVIDIA, and we could see, let's see how much it has rallied, and I'm gonna go all the way to the top, and it hasn't done the 38.2% retracement yet. So most likely 110 is where it is going, and we'll see what sort of price action we get from there. If it is able to get above the 110 level, then I think NVIDIA has made a pretty good low, and we could see maybe a trading range transpire, but the stock will actually likely to get more consolidation, better price action. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.